Tiger21. Siddharth sent me this link to this organization called Tiger21, which is like global. And I was fascinated by what they do. Essentially, I'm part of this trust group thing called at the Ascent Foundation, and it's basically a group of like 10, 15 founders or business owners who come together and they discuss their business and all of that stuff, right? So there are many organizations that do that for businesses. There's entrepreneur organization, there's young professional organization YPO, there's Ascent. There are many people who do this, but this one Tiger21 does it specifically for investments. Okay, so they have a entrance criteria of $10 million. So and $10 million of investable assets, not just $10 million net worth, but $10 million of investable assets. um, and yeah, you can only, that is the entrance criteria. And yeah, and then you just come in and you discuss basically your investment portfolio. So in a regular meeting, they have one person who's leading the meeting, and in a regular meeting they'll discuss like, oh, like what's going on in the world, what are the different investment opportunities and all that stuff. But what one thing that I love that they do is they have something called a portfolio defense, which is basically you show your entire portfolio, you're completely transparent about your portfolio, and you have to defend your portfolio. Holy shit. Like, just imagine this person. Like, I think the average person is worth like $50 million or something like that. Imagine this person who's like a multi millionaire and has to defend their portfolio. I was reading articles about this organization. Apparently, like, people sometimes leave within hours or weeks before their portfolio defense because they're so scared of defending their portfolio. I've heard that like the grilling can be like really intense.
But just to
And just
add, just the value of that is just significantly high, right? If you're able to defend your portfolio in your peers who obviously are smart and will bring interesting point of views, a lot of your blind spots can get cleared by just defending that portfolio, right? And to think of it, Sahil, you and I've done it with a couple of my other friends where we are openly talking about the investments that they're making, and we're trying to seek the other person's point of view, right? Like, what do you think? And this is just an organized way of doing this with like peers who are at the similar scale in terms of net worth.
100%. I mean, that's the whole point of this, right? The whole point is to learn to, the whole point is to find your blind spots. And I cannot believe that this doesn't exist. I'm sure it exists in an unorganized manner in India, like you mentioned. I'm sure there are like within caste or religion, I think it exists because I've heard like Kachi groups have a lot of these like business groups. So I'm sure like it also exists for investment, but you can definitely find a way to organize it much better. Uh, but before we go into the different business ideas for this, I just want to take 4 learnings that I found while researching about Tiger21. Because one great thing about Tiger21 is that it keeps the aggregate portfolio of all their members open. Okay, so these are people who are on average worth like $50 million, and their overall aggregate portfolio is something like $9 billion or something, 9 billion and 90 billion. I can't remember. And so you can see the aggregate numbers and you can see what these people do with their money. It is absolutely fascinating what they do with their money. The first lesson that I got from this was that you cannot make money. You cannot make this much money as a professional on average, because something like 60, 70, 80% of the people in Tiger21.
Mhm.
Tiger Global is an investment company. Tiger21, they got their money from entrepreneurship, right? So they were entrepreneurs who got an exit or their companies did really well, and that's why they have so much wealth. So you have to take those risks if you want that kind of fu money, where you have like $10 million of investable assets. The second thing I learned from them is that the behaviors that you do in order to earn that money are very different than the behaviors to preserve your money, because these people are in like a wealth preservation mode and not wealth creation mode. So therefore they have very little allocation to equity on aggregate on average. um, we, like me, you, Siddharth, we invest a lot in equity because equity is a risky asset class and can get you huge gains. But they have very little in equity. They have most of their stuff in like private equity, but yeah, it's equity. They have it in real estate. They have it in like other safer asset classes rather than in locked up in equity. Number three, on average, these people have a lot of money in cash. I think it was 12% was in cash on average. And during COVID, I think this was in October of 2020, it went up to 19%. Now think about it. Their average worth is about $50 million. 10% is
5
a
billion.
$5 million in cash. That's crazy, right? Why do they keep so much in cash? Number one, that a really interesting investment might come up at any point. You need to have the money on hand in order to do it, and that's true even for people like us, right? You never know when a good investment comes up. The secondly, you might be able to buy stuff at a fire sale price. Somebody might be desperate and they might want to sell a house or something like that. So that happened to me this January. I found a house in Low Parel in Bombay which was selling at a ridiculous price. One of the most beautiful houses I've ever seen. I couldn't buy it because I just didn't have the cash for it. Right? I didn't have the cash for the down payment, etc. Um, Number three, emergency fund. You always need an emergency fund. I feel like not enough of us keep enough of an emergency fund. The last lesson I learned from this is that social connections are super important, and social connections are as important as hard cash. I've learned this from my time at Ascent as well. Is the network I built a strong organic network is much more important than just being like finding some kind of wealth manager and just being like, "Hey, wealth manager, make me money,"
Yeah.
because the the incentive that the wealth manager has is to how is he going to get his commission. The incentive that your peers have is that I want to make more money, I want to help my friends make more money, therefore they're going to help you. Your incentive with your relationship manager and you do not align. And I think this is the way that I think HNI should be meeting up more and discussing much more transparently about their investments. So that I've spoken for a while. What do you think? Do you think there's some good business opportunities coming out of this?
Yeah, I from what I was reading, there's nothing in India like this, right? Nothing in Asia actually. Which I thought about it. Why isn't something like this in India and specifically Asia? I can only comment on India. I think traditionally a lot of these business owners who made money were primarily investing it in two asset classes: real estate and gold. Right? This was equity penetration was extremely small. Mutual fund penetration was extremely small. All other kinds of investment asset classes, and primarily because I think this comes back to one line that I read there, which is absolutely true. And this is, I'm quoting them: everyone assumes you're brilliant because you made a lot of money, but the most members know little outside of their domain or expertise. That's where we come in, right? That's what Tiger21 says. And this is absolutely true for India. People who've made money in India over the last 2 decades, 2 3 decades, manufacturing companies and different kinds of companies, they're not good at investments. I've spoken to my friends and their families, and they're now in, like, they made a killing out of, like, just being in good businesses, but they invested it wrong. It's invested in some real estate that's like the title is not clear, and all of this. And I thought back on like why this was happening. The reason this was happening was the unaccounted cash that was being generated in India, black money so to say, was so high, and there's only real estate and gold which you could buy. Years, at least years ago, you could buy these with a lot of unaccounted cash and nobody would know, right? On an average, if you saw a real estate price, at least by the government standard, there's something called as a guideline price, which is you can't sell below it. Let's say if a property was worth 1 crore, chances are the property is actually worth 3 crores and you've paid 2 crores in cash, right? So you've paid 66% in cash and 33% in white money. This was happening quite a bit in early 2000s, even like mid to 2010s, but no more, right? Because of the restrictions and regulations that the government has come up with, a lot of this unaccounted cash has gone away from the economy and people are moving to just like accounted taxable income. What that means is the investment opportunities open up significantly, but these people are not equipped to understand these investment opportunities or to take the advantage of these investment opportunities, which is why something like a Tiger21 in India could be brilliant.
Yeah, dude. Even my dad, before I started investing his some of his money for him, he didn't have any equity investments, which to me is insane. Like my dad is a very smart guy. He has done very well for himself, but he didn't have any equity. He was like, I don't trust it. Every time I've tried to put money in equity, I've lost it.
Yeah.
So he just doesn't do it. And so therefore, yeah, somebody like him, right, would benefit a lot from something like this. So okay, my thoughts about India are, so I found some numbers because you insist on numbers, Siddharth, is that there are something like 2.5 lakh HNIs in India. So and when I'm talking about HNI, as per the report that I read, is somebody who's a millionaire, right? Somebody who's has at least $1 million. So that's about 7 crores right now in India. So there are about 2.5 lakh people in India who have at least 7 crores, right?
I'm
That is a lot of
disappointed.
people.
But I'm also disappointed. It is a country of 130 crore people or some 1.3 billion people, and all we have is 2.5 lakh people who have more than 7 crore rupees. I'm both sad and also optimistic about the future. On like the headroom that we have for growth is just insane.
Yeah.
But yeah,
Yeah. There's a hopefully next time we have this discussion, there's be like 10 lakh millionaires. Who knows? Anyway, the point is that number one, if you are an investment professional, like you yourself know investment really well, I think you could start by building a network of these kind of people and start building these trust groups. So like start building like 10, 15 people ka trust groups, and start to get them talking about their investments, what they're doing with their money. Start with these like investment portfolio defense and all that stuff. But what's really important in all of this, I've learned this in my own ascent experience, is that trust is the most important factor in this, and therefore you need to make sure that there's no conflict of interest, that they're not in the same industry maybe, or like these are people like who trust each other for whatever reason intrinsically.
yeah.
I don't know what that reason could be.
and and
uh,
and this is I was actually talking to some really good friends of mine, people who have known for close to 10 years now, and I shared the Tiger 21 idea with them, and I was like, what do you guys think? And the immediate response was, are you going to be okay sharing your entire portfolio, let alone defending it, right? Just transparently sharing the entire portfolio is going to be a psychological shift. It's going to be some sort of a shift, right? Because money is something, at least in Indian concept, is very like not spoken about as much. Nazar lag jayegi types. I don't know, but that's a big hurdle. If this were to work in India, you'll have to figure out a way to like inculcate trust to a level where people are openly sharing their portfolio. The good thing is it's not like sharing it on Twitter or something. It's a group of 10, 12, 15 people, so it's not that tough to build trust within those people. But that's going to be the biggest hurdle, I think.
Secondly, I think this opportunity doesn't exist only in India. I think it exists in Asia as a whole, right? Because for people who are there in Singapore, Hong Kong, or whatever, right? Uh, the Tiger 21, it doesn't exist in these areas. I'm sure there are some informal networks over there, but can you make a formal network over there as well? Because there is a lot more wealth in those areas, and you could, if you are there already or planning to go there, you could start building it over there.
Yeah.
And I think this could start as like a side hustle kind of thing, and it could become over like a decade something like a legitimate business. And that's the same thing that happened with entrepreneurs organization. It just started off with one single group, and then it just kept spreading across the world.
Yeah.
So yeah, I mean, do you see other business opportunities here?
I think not just HNIs. HNIs is one part, $1 million in plus, but even lesser than that, right? People who are earning a good salary, let's say a crore every year, while they're obviously spending a lot of that on their lifestyle expenses and stuff like that. These are also interesting people where you can build a tech-led platform where it's not as high touch, where it's not 15 people coming together, but something which is some sort of social investment, like the combination of that, where you let a few of your friends and peers into your, like, you add them to your profile, and at an aggregate level they can see where have you invested debt and equity in real estate and gold and whatnot. And you can have interesting conversations there. You can have conversations about investment products there. A lot of knowledge could reside there, so social and investing sort of put together some opportunity there, I think.
What is that platform? I think Ind Money or Ind Wealth or what, something like that. What is
In
that
money,
platform?
in money, I
In Money, right?
absolutely love it. I'm going to try and get the founder of In Money on the platform. I absolutely love the app.
Anyway, so In Money has all this information anyways. So why not like In Money can tie up with somebody else, and then they are the upper wala tech layer. They have the database, right? And then they connect all, like they can send an email saying like, hey, we're starting this thing. Who is interested, just like do the opt-in form or whatever, and then they can yeah, they can start forming these groups.
Yeah.
It's just
And
like how do you build trust? That's the only question. But yeah,
exactly, right. And it could just start with like add your friends, right? Like they build a social angle. They
yeah.
don't even have to partner. They have a solid tech team, right? So they build the social angle and say, hey, just add your friends. And the information that we're going to share is not even real numbers. We're just going to say 30% of his portfolio is in equities, 20% is in gold, 10% of my portfolio is in NFTs. No, I'm kidding. But stuff like this could be shared on the platform, and you could have interesting conversations there. So yeah.
Yeah, and it could start off with like these vague numbers, and then as you go on and as you build more trust, it could become more and more detailed. Yeah, I think that's one way that InMoney could do it. In fact, but can you maybe get the information from InMoney through an API and then build another tech-enabled platform? I don't know. Maybe not, because that information is very
Yeah,
restrictive.
I doubt in money is going to let that information go. That's their moat,
Okay.
right? That's their moat.
Yeah.
Yeah.
Okay. Should we move on?
Yes.
I love Tiger 21, but let's move on.